Welcome back to the Market Matrix. In this video, we're going to speak about a candlestick pattern that's a bit different than all the other ones. It's called the island reversal pattern. And in this video, we're going to speak about the bullish island reversal because it has a bullish version and a bearish version. So in this case, let's stick to the bullish version. So what it consists of is a stock that comes down, gaps down, sits there for a while, gaps up, and then keeps going. So let's get into more detail as we go. And for this pattern, you won't really see it happening on an intraday basis. You will see it mostly on a daily basis. So each one of these candles is going to represent a day of price action. So maybe this is Monday, Tuesday, Wednesday, Thursday. You get the point. Each one of these is one day. And in this pattern can happen from a couple days up to 6 months maybe. It can take to completely form. So let's see what happens. We have the price moving lower, and then we have the price that gaps down. And if you remember from the gap video that we spoke about a couple videos ago, the gap forms when there's a difference in the opening and closing price of two consecutive candles. So we have this day over here. Let's say this is Monday. The price closed over here at $2. And let's say this is Tuesday. Price opened at, I don't know, let's say 30 cents. So there's a gap in the price over here. So that's what a gap is. Now, we have the stock. It sits there, sits there, sits there, sits there. And what's going on? Not much is going on. It might break a little higher, might break a little lower. But what we see from here is that, okay, there's a gap over here. We have a high over here after the gap, and we have this low over here after the gap. So we want to keep those in mind. Why? Because we're going to use them later on in the video. So when we see this over here, the price gap up, and where does it gap up to? The high over here. That is what we want to see. And once we see that price gap up to this high of this consolidation period down here, then we spot the island reversal. Because without this candle over here, all it is just this. We just have a gap down and the price just moving sideways. We don't know what's going to happen. Maybe it could gap down again and keep going lower. Maybe it stays here and it just stays here. And it just continues higher without gapping up. We don't know. But when we see this, then we know this can potentially be a bullish island reversal. So remember we spoke about this high over here. We want this candle to gap up and hold this high over here. Now, if we see that, then we can enter the long trade. Remember, it's a bullish formation. So we're entering based on anticipation of the trade going higher, the price going higher. But we need to know how far higher we should expect it to go. So we're going to measure the move. And how we're going to get that measured move is we measure from the highest point of this consolidation over here, where this price is stuck over here, the highest point up to the lowest point. We measure that move, and then we put that move above over here, above this high. That's the move we should expect to see. So we already spoke about how we're entering over here on this candle, but let's say something like this happens. If the trade goes, the next day the stock goes back down below this high over here, what are we going to do in this case? In this case, you want to cut the trade. You take the small loss, and you wait to see what happens. Because this thing can come down to fill this gap before continuing higher. Maybe it just sits here for a while and then it goes higher. We don't know. But this candle, we see it closed below this high over here. So what does that tell us? That we're not sure. The buyers and sellers aren't sure. Maybe this thing might keep going lower. This candle has a wick over here. It shows that the price, it was rejecting the price above this high over here. So we don't know. So it's safe to say we could just cut the trade and wait to see what happens. Maybe it'll come back up the next day and hold here again and break this high, prove as support, and it continues higher. In that case, we'll re-enter the trade. But let's say that the trade stays in favor. So it's holding this high over here. Remember, this is the high over here. It's holding this high over here at this point. And we're already in the trade. Now, what we do is just we stay in the trade because we already measured the move. Remember, this move over here is this same move over here. So we're able to ride this whole wave. And why it's called a bullish island reversal is, well, because what is an island? An island is isolated. It's surrounded by water. For example, if you're in New York, the island of Manhattan, it is surrounded by water. It's not connected to the rest of New York, so it is an island. Same thing goes over here. This thing is isolated. It's by itself. This consolidation of price, isolated by itself. So up until we have this gap up, we don't know what it's going to be. We don't know if it's going to be an island reversal. We don't know if price is going to stay here. We don't know if price is going to keep going lower. We don't know. But once we see this gap up, then we know, okay, this can potentially be an island reversal. So let's just have a quick recap. We have the stock that comes down. It gaps down. sits there for a while. It might sit here for 10 days. It might sit here for 2 days. It might sit here for 2 months up until we get the gap up, if we get the gap up. So we have this move down, gap down, price sits here, gap back up. Okay, at this point, we know this high over here. We measure this move. We get in the trade. If the trade goes against, goes like this, falls back below this high over here, we cut the trade. If not, and if it holds this high, the trade is still intact, and we ride this whole wave over here. And bada bing, bada boom. That's about it. So I hope this video was helpful to you guys. And in the next video, we'll speak about the bearish island reversal. Very similar, except, well, it's just a bearish pattern. And I hope you found this video useful, and all the other videos useful, and the future videos useful. Thanks again for watching.